Now I wanted to get to, I guess, our one of our topics I wanted to discuss today, which is the Bank of Canada policy rate decision. And as I said off the top of the show, Bank of Canada cut interest rates by a quarter point this morning. They made that announcement at 10 a.m. And interesting enough, I could kind of ramble on as to why they decided to do that. But I think our first illustration kind of sums it up best, really. Let's get to that first illustration here. Bank of Canada expected to cut rates again, and it is right there. And you can see here the inflation rate in Canada coming down significantly from 8% once upon a time, now down to 2.7%. Unemployment was obviously the unemployment rate coming down quite a bit, but you can now see it starting to move significantly higher, now well above 6%, almost in around 6.5%. 6.4, I believe, is the exact number. So we're starting to see unemployment tick higher. So inflation down, unemployment up, and probably the one of the more critical stats that the Bank of Canada tends to discuss or harp on is this GDP per capita. And you could see, so this is kind of the productivity. Are we productive as a people here in Canada? And you can see the productivity is starting to come down as well. So Bank of Canada said this morning that they see inflation, they see a continuation of inflation's path down to 2%, and they are going to cut rates because they see a slowdown in the economy, starting to see a slowdown in a bunch of areas, although they did say that services remains sticky, meaning inflation remains high in the services area. Housing is still quite resilient. It's quite stubborn. Price of housing, they don't want to come down. And I think that has a lot to do with supply, obviously. The amount of homes for sale, still not too many of them. And so when you have fewer homes and you have people wanting to move, you have a lot of people chasing different homes, and obviously the prices remain high. The next illustration we have here, again, we've seen this many times, but it's just been updated. Bank of Canada's overnight interest rate versus inflation rate. And so now you're seeing a 4.5% rate. Once not too long ago, we were showing a 5% rate, but you can still see here that about 1.8% between the overnight rate and the inflation rate at 2.7%. So there is still room for the Bank of Canada to cut. And for me, it's all about a couple of things going forward. Obviously, the Bank of Canada is going to look at the economic data being released to decide if they should continue to cut. They mentioned today that they will continue to cut. The question becomes when. At their next meeting, that would be 3 meetings in a row of cutting rates. I'm not sure they would do that. Or will they cut rates again, perhaps starting in the fall or maybe towards the last quarter of this year once or twice? So we'll have to see. And the other thing I'm keeping an eye on, and I'm sure the Bank of Canada will be keeping an eye on as well, and probably they'll receive questions on this, is can the Bank of Canada go at it alone, or do they need the Federal Reserve in the US to start cutting rates at the same time or as well? Right now, the Bank of Canada has cut twice and the Fed has not cut at all. If the Federal Reserve does not cut in July, which they're not anticipated to, I think they have a meeting in about a week's time or so, and if they don't cut again in September, what will that mean for our currency here in our country? And I've talked about this, or I mentioned this on previous shows. Can we still have a strong currency versus the US dollar when we're cutting rates here in Canada, but the US is not? And I think the answer to that question is no. I think our dollar will start to fall. I think it's around 72, 73 cents today. We could see perhaps 70, 71 cents. If we were to cut maybe three, 4 times before the Fed cuts, maybe we see a dollar under 70 cents. So that is something I think the Bank of Canada is going to be watching. The last thing we want is for inflation to start to move higher again in our country, because whatever we're importing from the US is just so darn expensive because our dollar is weaker. So another thing that the Bank of Canada will keep their eye on, another thing that investors should keep their eye on, and obviously something that I'll be talking about on future shows to come.